right, let's get started. Good morning, everyone. I'm Joanne Coombs, and I'm here today with Marina Parkin, and we're going to talk today about the differences and more in-depth discussion of the Payroll Protection Program, or PPP, and the Economic Injury Disaster Loan Program, or EIDL, as it's referred to. At the conclusion of today's webinar, you will receive an email with this recording, and all of our webinars are available for your review on our website, our Facebook pages, and our Coombs & Associates YouTube channel. So if you need these resources, they're absolutely available to you. You don't need to call and request them. They will automatically be distributed to you just for attending. So you'll get that. We do need a minute to get everything uploaded, so just be patient. We have talked now on Tuesday about the broad overview of all of the programs that are available, all of the tax impacts that have been passed, and unemployment, everything. So if you have questions about the broad overview, you can go back and review Tuesday's webinar. We're going to start building on that with each additional webinar and providing a more in-depth discussion and review of how these programs apply. We will continue to bring you the latest developments. These things are fluid. The rules were issued without a lot of guidance or clarification. That is coming out every day. We just got another big batch the day before yesterday from SBA on this program, so we'll be pointing out some differences to you. Don't be alarmed or concerned if you have talked to your bank or your advisor, your lawyer, your accountant, and gotten different information. This is fluid. It's changing. We're going to give you provide you what we know as of now. But in 2 days, we will tell you if that changes or if we learn something that is different. So let's jump in. We're going to talk about the differences between the Payroll Protection Program and the Economic Injury Disaster Loan. You'll see even this graphic, which we're providing, has been updated. So we're going to be cleaning this up and get you a revised version as well. But this is great for discussion purposes to compare and contrast the two programs as far as what's available, what the uses are, and things like that. So you'll have this available too for download. We'll get it revised with the most up-to-date information as well and get that distributed to you. So first, let me talk about the Payroll Protection Program. This is by far the most popular program. The Payroll Protection Program was available starting April 3rd, last Friday, for small business owners, and it will open up tomorrow, this Friday, the 10th, tomorrow, for independent contractors. So if you are a realtor or consultant and you're an independent contractor, you are going to have to wait until tomorrow to apply. A little bit about the Payroll Protection Program. The available, who's eligible is any business under 500 employees. So in the scope of our practice, that's pretty much every single client that we work with. You have to just demonstrate the uncertainty of the current economic conditions makes the loan necessary to support ongoing operations. The government is looking here to provide access to money to keep employees busy and working. Rather than put this money through to unemployment and have people not working, the purpose of this is to keep business flowing so that this ramp back up when this virus subsides is not so slow. You'll be able, if people have been still working, to get back up to full speed shouldn't take as long. And that will be a great shot in the arm for the economy. And that's why they've taken this approach. In order to apply, you've got to apply with an SBA approved lender. You are, for most lenders, required to have already a business banking relationship with those banks. We've heard a lot of frustration, particularly from our independent contractor types of folks who maybe haven't operated their business like a business in the past. Maybe they've just deposited their business income into a personal checking account. Even if it's a separate personal checking account from your regular day-to-day operating account, the banks are still requiring it to be a commercial checking account. So some folks are being frustrated by this. Keep in mind, the implementation of this program is going to be slow. It is going to be frustrating. It's only been about a week, and it's coming. The program was opened with $349 billion of funding. As we sit today, so far about $115 billion has been awarded. So there's still 2/3 of the money remaining. There's also been talk in Congress about extending that and adding another $250 billion. The government's been pretty clear that they're committed to this program, and it doesn't seem like if they need more money, it seems the spirit is that they're going to continue to fund it until everyone has been helped. There are now 3,800 approved lenders nationwide who can help administer this program. Another thing to keep in mind, and I'm not making excuses for banks, we've personally been frustrated by this as well. Last year, in the entire SBA lending in the US, they lent $20 billion. We're talking about 349 in a week. So you got to think about the capacity and the strain that's being put on the banks. While it is frustrating, these banks are our partners in business. They are trying to get to us as quickly as they possibly can. So patience is definitely the name of the game here to keep you from going crazy. The nice thing about the payroll protection program, you have no collateral or personal guarantees that are required like there are with a typical SBA loan. So they're not going to be asking for a lien on your home or your business assets in order to take this money. The downfall is there are some limited restricted uses that you can use these funds for under the PPP program. That's payroll, it's healthcare benefits, medical or paid time off, family leave, for any reason, not just for COVID-related illnesses, mortgage interest payments, not the principal, but the mortgage interest or rent, and utilities needed to operate the business. So you can't just spend this money on anything. You're going to need to document and keep track of what you paid if you'd like to take advantage of the biggest benefit of this program, which is up to 100% debt forgiveness with no tax on that debt forgiveness. If you use the funds in the required manner, the amount of this loan ultimately becomes a grant, and it becomes forgiven, and so it's free money to the business to help you operate.
I'd like to add too that those payroll costs also include the retirement plan contributions. So for those that are making, now those are the employer contributions. So a lot of you have the employee portion. Let's say you have a 401k plan where you're contributing as the employee, and then you've got the employer. This is only going to be the employer part. So even if you yourself are an employee, the contributions that you take out of your salary won't count here. It's your salary, the total salary that's going to be the amount that you will put into the payroll cost, but any of the employer match for yourself, as well as whatever you're putting in for your employees, is also part of those costs, together with the health benefit and other benefits for employees.
Thank you. Can you also touch on the income limitation too while you're at it?
The salary cost is limited to $100,000 per employee. And from what I understand, so any of the benefits, you know, the pension contribution or anything like that is not part of the 100. It's really got to be the salary that is 100,000. From what I understand, and Joanne, you can correct me if there's bonuses on top of that. Are they part of the 100,000 as well? So,
yeah, the breakdown that I'm seeing is a cash versus non-cash compensation. So if you earn salary, or whether it's hourly wages or a fixed salary, bonuses, incentive compensation, any money that you're taking home, that is going to be part of the calculation on how they determine what your loan amount is on the average. But the maximum that will be considered, people can still make more than 100,000, but the maximum that will go into the formula is $100,000 for that cash compensation. If you have someone who makes, say, 125,000, they still count up to the 100,000. So I've had some people ask me over the last week or so, I didn't think I could include that person. You can, just the limit at 100,000. And then that $125,000 employee can also have on top of it the non-cash benefits like the paid time off, the retirement plan benefit, and the group health insurance premium. Yeah, so that's going to go into that calculation.
And the other thing I wanted to mention from just the technical standpoint of supporting these amounts, they are all asking for payroll reports. I have seen a client send me last night their application to look at, and it's asking for the total salary, and then there's a box in the application that says anything in excess of 100,000, please enter here. So you have to put in the gross that then they can match to the payroll reports, and then you yourself are backing out that excess of 100,000. Some of them don't ask for that, so I would say if you provide the payroll report, whoever is going to be looking at this should be able to look at each employee and back out the excess over 100,000. But I think different banks' applications are worded a little bit different. So just make sure you know that you're going to be limited to 100,000 per employee.
So what that's going to mean is all of the payroll that you pay, and this is W-2 wages only. If you have independent contractors that you also pay, they're not going into this calculation. So it's going to be your average payroll times for the 12-month period. So your total payroll divided by 12 times 2.5. So you're going to get 2.5 times the amount of the monthly average payroll that you have been spending over the last year to have available for the next 8 weeks to spend on payroll, to spend on rent, to spend on utilities. That 2.5 times is completely forgiven if at least 75% has been spent on payroll of the total proceeds. So if you got a $100,000 loan, at least 75,000 went to payroll. Then the balance went to the other permitted uses, like rent, like utilities, etc. If you also are required to maintain your head count, so you can't fire somebody without replacing them or lay them off without bringing them back by June 30th, because this program is running from February 15th through June 30th in terms of the timeframes of calculations. You also cannot cut someone's existing pay by more than 25%. If you do reduce your head count or cut someone's pay by more than 25%, it will have an impact, a sliding scale impact on your debt forgiveness. So let's stick with the example of the $100,000 loan proceeds. Let's say you cut people instead of $75,000 going to payroll. Let's say now you've cut somebody's wages. Now it's going to reduce that debt forgiveness from 100,000. Maybe you'll only have 90,000 forgiven, for example. I'm making up numbers that, in a random, just to provide a demonstration. But whatever balance of the loan that is not eligible for debt forgiveness will turn into a real loan with a 2-year repayment amortization at 1% interest. You'll see on our graphic, initially when this program was instituted, they were going to charge 0.5 of 1%. And it is now, the rule has now been changed to 1%. So
before we move on from the employees and how many people you have and not being able to fire people or cut their salary, a really good question has come up and I want to make sure we address it to everybody. If you have already fired somebody or they are collecting unemployment at the moment, and then you get the PPP funds, what do you do with these people? From my understanding is you are not penalized if you have had to let some people go. When you apply for the PPP loan, I believe what they're looking for is your steady salary, your normal salary, which is why they're looking at your 2019 payroll records and even probably the first quarter of 2020, if that's applicable, depending on how long you've been in business. But you are not penalized and you're not going to get a smaller loan because right now you've got 2 or 3 less employees. You can actually hire these people back if you get the funds.
Yeah, and they just have to be back on the payroll by June 30th, which is the completion of the period, the testing period, if you will. So if you are in a financial crunch right now, where while you're waiting for the PPP funds, you can't continue to pay people, you will not be penalized if you lay someone off or furlough them during this period. They're looking to see that by the end of the period, all of this has been restored. If you have restored by June 30th, it will not impact your debt forgiveness. The purpose, again, is to keep money going into the hands of the employees and making sure that there's as little disruption to both the employee's income stream and the business's stream. Sorry, I don't know what happened to my light. Apparently I sat too long and it got mad. So you need to be mindful of that. If you have to let somebody go for disciplinary purposes, you can let them go and replace them with someone new. It doesn't have to be the exact same human being, but they're looking at the head count. So if I terminated Marina for poor performance, I could hire another CPA to replace her with no penalty at all. So just be mindful of that. Now,
another great question too. Sorry, because
no, go ahead.
It's hard to move on from the employee portion of it. But another great question came in. Is can you pay for payroll that just happen, let's say in April, if you get the funds in May? From what we understand and the way that I'm reading it, and Joe, and you tell me if you're reading it a little different, but the forgiveness starts for the amount of funds you spend on the day the loan originated.
It's the origination date of the loan.
From the origination loan.
They're looking to gather the average payroll figures from before you got the loan, but the actual use of the loan proceeds has to start from when the loan started. So like I said, if you're running into a crunch where you're running out of money, you can furlough those people or reduce salary. If you have to cut salary by 50% to keep them on, that's fine. But when you get the money, then you've got to restore them back. And keep it that way through June 30th. Okay? Other things there. Keep in mind as well, if you're reading about any of this stuff online, the 1% interest rate and the 2-year note amortization, those timeframes are rules that the SBA has suggested. However, the statute that created the Payroll Protection Program allows a maximum interest rate of 4% and a maximum amortization period of 10 years. So those could be different on a case-by-case basis, or the SBA can change their recommendation, which is why it started out at 0.5% and then went up to 1%. You are definitely going to want to get this application made as soon as possible, because I do think they will continue to fund this. I think there's less fear about it running out of money, but I do think as this continues, you're going to see a tightening of the restrictions. You're going to see more clarifications, more carve-outs, more exceptions. So people who applied April 3rd are going to get more coverage, in my opinion, than people who apply May 3rd. Because these rules are written by folks who are not in the industry. They're written by legislators, not by people who do any actual work. So there are things that they hadn't considered. For example, this PPP program is available to independent contractors. It's available to real estate agents or mortgage folks who are not on W-2. They gave guidance that said, we want payroll tax returns, Form 940 and 941. We want payroll reports, W-2s and W-3s. Those things don't exist for self-employed persons. So we've got to use our best guess on how to continue to provide documentation for the income. And more importantly, they've given guidance about how to prove that you spent the money properly for small businesses. You prove the payroll reports, et cetera, to make sure that you're eligible for the debt forgiveness. But they've given us no guidance yet on what to do for self-employed persons. If I'm a real estate agent and 100% of my commissions are my pay, how am I going to prove that I spent the loan money on payroll? I don't have a payroll report to provide. Am I supposed to give my utility bills? We don't know that yet. We're expecting more guidance to be forthcoming any day, because now the self-employed folks can apply tomorrow. So, they wrote this rule. It applies to for-profits, it applies to nonprofits, it applies to tribal organizations, and they wrote one set of rules for all of these different types of entities. It just doesn't make sense. They were trying to do this to be expedient and quick to get the relief to folks, but sometimes haste makes waste, and it's made more questions. So they're going to continue to issue guidance. My point being, the longer you wait, the more rules you'll be subject to, potentially as it will shrink the amount of the benefit that's available. So I would get your things together and apply as soon as physically possible.
Joanne, what would you recommend? How would you recommend they check those boxes at the top of the application? I know we've discussed that several times at our webinars, and also just you and I together. There's all of these boxes, and most of our clients fit 3 or 4 of those boxes. They are LLCs, they are S Corps or partnerships, they are self-employed, and they're also independent contractors.
Yeah.
I mean, for example, a realtor fits 4 of those things.
Yeah. So what you're going to want to do is have a chat with your advisor, because that is going to be on a case-by-case basis. What's really frustrating about the form, again, not written by people who do the job, is that you have that LLC choice and you have an S Corp choice. Meanwhile, the IRS doesn't know what an LLC is, and the state of Florida doesn't know what an S Corp is, because the S Corp exists only in the IRS code and the LLC exists only in the state of Florida corporate entity structures. There's no LLC tax return, if you will. So I don't know why they've muddied the water with types of entities versus methods of taxation, but they have. It's shocking news, but the SBA did not consult either of us when developing the form. So, you know, we're stuck with what we have. I would say, if you are an S corporation, I would check that. Oh, in your example, Marina, where I've got an independent contractor who's a realtor, who maybe has a PLLC formed and it's taxed as an S corporation, I would only check the box of S corporation, because the rule on the form is clear that you're only supposed to check one box.
Mm-hmm.
If you are a realtor and you do not have an entity formed and you do not get taxed as an S corporation, you're on Schedule C of your regular 1040 tax return to report your income. In that case, I would check the independent contractor box. So if you receive your income and you get a 1099 at the end of the year, you absolutely are an independent contractor. If you don't put that income on any kind of business tax return like the S corporation tax return, I would check independent contractor. If you have a mixture of that, you're going to have to talk to somebody, because there's just not enough rule of thumb to give you.
And self-employed, to me, it seems like a good, you know, when in doubt, you kind of put self-employed, because if you are not independent contractor, somebody, in my opinion, who gets a 1099 commission income, like a realtor or anybody else, if you are running a business, you may be on Schedule C, you may not be an LLC or an S Corp, you're just running a business, you've got a Schedule C. You know, you're making sales or you're, you know, whatever it is you're doing, you're not, nobody's reporting those, you're selling to a bunch of customers, so you don't get a 1099 from any one place. I think self-employed then is the best category for you.
That's true. The other thing I would use self-employed for, now that you mentioned that, is a real estate agent who maybe has an assistant. If you are receiving 1099 from one agency, but you have staff that you pay, then I would go under self-employed, because now you've got another person that you can put into that payroll calculation. If you have a part-time person or someone who's an independent contractor who's doing work for you, they need to file their own PPP application. So, for example, we have an outside bookkeeper who helps us in the law firm and CPA firm to manage our books. I would not include her in our law firm PPP application in the payroll section, because she is not my employee, she's an independent contractor. So she needs to file her own PPP application. She wouldn't be getting a benefit out of me. I wouldn't be continuing to pay her in that calculation, so she would apply for her own.
And this is why I also feel like when it's time to figure out where your funds were spent, when you're required to spend 75% on the payroll costs and 25% elsewhere, I believe those 25% should not include independent contractors, because the idea is those independent contractors would have filed their own application. So the other 25% really needs to be spent on, you know, mortgage, rent, utilities, maybe other carrying costs that you need to pay to keep your business alive.
That's exactly right. That's exactly right. And they are, you know, we don't know exactly what that process is going to look like in terms of documentation, or how stringently they're going to review that, because we're not there yet. So we'll hope for more guidance. Again, we'll continue to keep everybody posted. We're going to continue to do these webinars until this is exhausted, because we know that this is changing. And if you show today and you come back in a week, we may have different information for you. So
there's a couple of questions that have come in on the forgiveness. So how do you document this and how do you document that? Well, that's the idea. I think right now the hot issue is applying for these loans, getting in line with the bank, figuring out who your bank is. This is the hurdle we're overcoming now. I think the next step is going to be processing these applications.
Mhm.
So the next thing I feel, the banks are going to call you and say, oh, give me the backup for this, or give me the backup for that, or or no backup at all. I think that's the next hurdle we're going to have to address once there's more guidance, or once we talk to some of these banks to see. Then I think will become, how do you then document the forgiveness?
Mhm.
Without really having any of that right now, my suggestion is just to keep really good track on what you're spending money on. So just a few questions. One on the employees. How do you show that you've spent this funds on the employees? Well, if you've got payroll reports for those 8 weeks from the loan origination date to the date that forgiveness is going to start, I think that's going to be your best backup for the employees. Same thing, if you made payments to your rent, to the utilities, to other operating expenses, that's probably going to be your backup. I am not sure if they're going to want to see your income statement from the business, or receipts that you've paid the staff, or what it's going to look like. So I think at this point, documenting is key. Almost like pretend you're going to go under IRS audit just in case. Another great question that has come in is, can I commingle my funds? So is that going to be an issue if I'm paying different expenses out of the same account? Well, if you have one account and you are not going to go run out now and open another account, then I think, again, just documenting and having the backup of what you spend money on. But most certainly, if you can avoid commingling and have one account for the business expenses, that will be easier than for you to pull the activity from that business account to show what you've spent the money on in the 8 weeks. That's, I think, the best advice we can give at this point until we see a little bit more of what they're going to be asking for. I hope that answers that.
Yeah, thank you. Now, for new businesses, can you talk a little bit about what the testing period would be for the payroll if you have a new business that just started in January of 2020, just getting out of the gate?
One of the requirements to get the PPP loan is that you've got to have an operating business. So business has to be an existing business as of February 15th. So I think what the point of this is it's trying to avoid those startups that don't have a business concern as it is, and now they're asking for funds. I have had clients ask me, one of the things that they're trying to determine is the business operational or not, is they're asking you, have you had any people or subcontractors? That knocks people off their balance when we're telling them subcontractors are not included. That's not why that question is being asked. That question is being asked because they're trying to determine, are you a business that's alive or not? So have you had any employees? Have you had any independent contractors? Have you had any sales? Are you a hobby? So I think that's really what it's trying to determine. So February 15th is your date on which you should be operational. You may have been a struggling business, but you were operational. The way that I understand this whole payroll is, even though they're asking for the payroll going back 2019, if you've only been in business for 6 months of 2019, you provide the payroll for 6 months. And I think there's going to be a place, or at least when you talk to the bank, to indicate that the average monthly payroll is not 6 months divided by 12. It's going to be the 6 months of payroll divided by 6 months. That's the way that I'm understanding how that average is going to be calculated. So it's really when you've been in business.
Okay, perfect. Now, want to talk about how we reduce the debt forgiveness. Now, we talked a little bit about if you reduce the number of employees or the compensation by more than 25%, if you don't correct that by June 30th. But there's one other component to that debt forgiveness that will be reduced, and that's if you take money, the emergency grant under the EIDL program, which we're going to talk about next. So just keep that in mind as well. That'll also fall into the PPP calculation as well. If you do end up with a portion of this loan that needs to be repaid, as I said, it's at 1% interest. It's 2 years to repay it, and you will not have any payments for 6 months. So there will be, a deferment period before those payments begin. You do need to meet with a sponsoring bank. There needs to be an SBA approved bank that you make this application through. You can't go straight to the SBA for the PPP program. The standard SBA fees are all completely waived for this program. So the SBA isn't charging you anything. For the lender, they're going to be charging 5% of the loan amount up to $350,000. From 350 to 2 million, the bank will charge a fee of 3% of the loan amount. And for a loan over $2 million, it's 1%. The maximum loan you can obtain is 10 million. Okay. Questions before we move on to EIDL?
The new employees that are coming in, again, back to the averaging. So people have hired new people. I believe that is all going to be okay to be included in the payroll figure that you're trying to get the loan for. So even though they may be looking at 2019, I think in most places there's going to be a box to say, you know, if you're only providing me the payroll in 2019, have you had any additional employees so far in 2020? Again, I've seen a couple of different applications just from what the clients have shared with me, and some of them just have a different way that they're asking these questions, whether it's an additional box for anybody new who's come in, or maybe the average payroll for the last, you know, 12 months, including up to the end of March, something like that. But there's certainly a way for you to indicate that now you've got more employees than you did in 2019. So yes.
Yeah, you're also, one thing I've seen in my experience with some of the banks I've interfaced with on behalf of clients is if you have had an increase, they want to support that as well. So they may look to the 12-month period rolling. So March 30, you know, April 1st to March 31st, as opposed to just 2019 in full. I've seen that in a couple of instances. Another frustration that we've heard of with folks is with banks that were not ready to accept applications. Some banks are accepting them inside the bank, but not yet passing them along to SBA. We've also heard quite a bit of an uproar. Wells Fargo, it has stopped taking applications. They had a lower amount of funds they were permitted to disperse because of their fake bank account problem that they had. They got a penalty from the SBA, so they weren't allowed to participate in this program, which I don't know if that's going to stick around or not. Seems to me, I don't have any inside knowledge about this, but it seems to me from a policy standpoint that it's unfair to penalize the Wells Fargo customers. They were trying to penalize Wells Fargo, which means if they process less of these loans, they would make less money because they're making the 5% fee. However, it seems to me that if that's where your business relationship is, there's been quite a bit of uproar about that. So that's something I do expect to see more clarification about, or possibly a change. Any SBA lender that offered the 7A program, which was a particular type of loan program before this CARES Act passed, is eligible to issue loans under the PPP program. But there are other non-SBA lenders that are being certified every day. In the last 2 days, there were 300 new lenders approved based on the SBA's website. They were at around 3,500 a couple days ago, and I just saw this morning it was up to 3,800. So if you're having trouble getting to a lender, you can let us know. We do have resources where we've been, you know, obviously in deep communication with the banks on a constant basis to say, okay, if you just didn't have, we've seen a lot of people who just didn't have a business checking account. Please learn from this, and let's use this as an opportunity when the smoke clears to shore up your business practices. But in the emergent time right now, there will be other banks that will be available to help you. It'll be a little bit more time consuming, so you know, a little bit more patience required there as well. Okay. All right, let's jump over.
Great message we just got that Wells Fargo clients received letters via email yesterday that they're back in business for their clients to assist with the SBA in the next few days. So
there was no way that you could continue to penalize the individual account holders. It's not their fault that that happened with Wells Fargo. So I'm not surprised to see that. So thank you to whoever contributed that. Let's jump over with the time we have remaining and talk about the Economic Injury Disaster Loan, or the EIDL loan program. The nice thing about the EIDL loan program is it's much broader. You can use it for any of the business operating expenses. It can be used for some of the same expenses as PPP. So if you were ineligible for PPP, you can still get your payroll covered under EIDL. You cannot double dip though. So you can't put in payroll under PPP and include the payroll numbers in your EIDL application as well. This is also limited to businesses with under 500 employees or less. You do have to demonstrate that you have suffered substantial economic injury. So for some folks, EIDL, you might get PPP first and then turn your attention to EIDL in 2 months if this continues, for example. Whereas you just needed under PPP uncertainty about the economic condition, making the loan necessary. You actually have to have demonstrated harm under EIDL. The EIDL program is not, you can go straight to the SBA. There is a particular website which is on our website. You can also Google EIDL application and it'll take you directly to the SBA link where the application is. The maximum loan amount is $2 million, and you come up with that number by taking 6 months of the operating expenses. Like I said, this can be for payroll, mortgage payments, rent, increased cost of materials. So if it's now more difficult to obtain materials for, say, manufacturing, due to interrupted supply chains and things like that, you can apply with those figures in mind as well. The big thing is you can use it to repay obligations that cannot be met due to the economic harm. So you can use this to service other business debts where you're really not permitted to do that under the PPP program. So the beautiful thing about EIDL is it's much more broad. It's designed to keep the whole business afloat, not just the payroll portion of the business. Downfall is it requires a little bit more stringent underwriting process, and it is 0% forgivable. So whatever funds you take from this, you are going to have to pay back. Now, the interest rate is 3.75% and the amortization period is 30 years. So you're going to have a nice low monthly payment with which to pay that back. The typical SBA underwriting and collateral guidelines were initially in place. They've now been updated to say they won't take collateral on loans that were $25,000 or less. And they've now expanded it to say they won't take a personal guarantee unless the loan is over $200,000. So that's different than it was when this was first opened up again. The EIDL program is something that has existed inside the SBA for many years. This is not a new program like PPP. This was basically turned back on because of the current conditions. So the other things that were waived were the EIDL requirements historically said you had to exhaust all other avenues of lending. You don't have to do that under the EIDL program this time. You can go straight there. The beautiful thing about EIDL, there's a $10,000 emergency grant component. You can apply just for that $10,000 grant, or you can apply for your full EIDL program. Let's say your 6 months of operating expenses would be $500,000 to pick a round number. The $10,000 is sent to you allegedly within 3 days. We're hearing from folks in actual experience that it's not, that's an aspiration and not actually happening, but they are trying to get that money to you very quickly without any underwriting and without any rules or requirements. That $10,000 you will get whether or not you actually get approved for the balance of the EIDL loan. The EIDL loan is based on your credit as well. They have loosened the typical SBA requirements, so you don't need to be the squeaky cleanest borrower, but you can't have felonies, you can't have, there's certain types of issues out there that are going to prevent people, but they're pretty extreme. If you just have an installment agreement with the IRS, or you just owe the IRS some money, that's not going to preclude you from participating in the EIDL program. So that $10,000 will not only come quick, but it's not subject to any strings. However, as I mentioned previously in the PPP program, that $10,000 is going to be a part of your debt forgiveness in the PPP. You had the opportunity to take advantage of the EIDL program back in earlier before the PPP program opened. So if you have already obtained an EIDL loan, that will get refinanced into your PPP loan as well. So
I also wanted to mention that another rule that this EIDL loan has relaxed is, again, the requirement for the business to be in business for a year. So the traditional EIDL loan was only available to businesses that were operating for at least a year before the disaster hit. In this case, that's the rule that they have relaxed as well. So again, those businesses that have only been open for a couple of months last year are eligible to apply.
Yeah, what I saw was that you had to be in business by January 30th of 2020, whereas PPP was February 15th. This is the other part of this alphabet soup that's frustrating and challenging, not only for us as business advisors, but for the folks trying to utilize these programs in their businesses, is, you know, all of the time periods are different, the time frames, the rules and restrictions. Keep in mind, none of these rules were written by the same agencies at the same time with the same requirements in mind. So you may find that with some of the other programs that are available, there are competing rules and requirements. So be really careful. I've heard some advisors just tell people, run out and get whatever you can. I'm not a proponent of that, because I really want to make sure that we're going and getting the right thing for you. That can still be done quickly. I'm not suggesting that you move slowly. We do need to be abrupt in the disposition of these applications. Some of it is, yes, maybe you should apply for all of the programs, but there should be an order in which you do so that you can maximize your benefit and not end up in a situation where you've gotten less than you were entitled to, or find that you have yourself in a predicament where we've seen some rules that require repayments of other types of relief, and those programs do not permit you to pay off other types of relief. But you know, like I said, competing agencies with competing rules and requirements, so you can get yourself into a little trap there if you're not aware. So
where we see right now both loans working really well is if you as owner have multiple businesses, where you have, let's say, an operating entity, and then you've got maybe a land holding entity. So for the operating entity where you have payroll and you have people, that's the one that's going to best qualify for the PPP loan, because you're going to get the payroll portion and keep those people hired than the doors open. If you've got an investment entity, let's say you've got a building or a portfolio of rental properties where there's no payroll, that's where applying for the EIDL loan will be great, because you've got the operating expenses to keep those properties afloat, but they're not payroll related. So you as the owner, what you're not applying for you as the owner, you're going to apply for your operating entity for, let's say, the PPP loan, and then you're going to apply for the land holding entity. Even if you are going to be the owner that holds that real estate portfolio, you will then apply for that use of the funds for EIDL loan. So that's where I think you have to be careful. So the key again here is not to apply for the same use of funds for the same operating or for the same entity for both loans. So that's where you got to really watch it.
And let me clarify too, the $10,000 grant, the emergency grant, that is not subject to any repayment. So even if your EIDL loan is ultimately denied, you don't have to pay that money back, even if you never applied for a PPP loan. If you did apply for a PPP loan, the $10,000 from the grant will be part of your PPP debt forgiveness as well. But those can be done together or independent. You're not required to do one or the other, and you are not precluded from doing both. For our clients, for the most common scenario, what we're seeing is it's better to go PPP first and then EIDL, unless you're in one of those, like Marina said, a business where there isn't payroll, but there are other operating expenses. There is a definition of what the working capital or permitted uses of those funds are for both PPP and EIDL. The EIDL uses are more broad. So you can use them for payroll, but you cannot use PPP funds for payroll and EIDL funds for payroll in the same testing period. You can use them for providing sick leave under both programs, but not at the same time. Mortgage payments, not just the interest are available under EIDL, whereas under PPP, it's mortgage interest only. Under EIDL, it's the full payment. Same thing with rent under both. Meeting increased costs to obtain materials. So if it's now more expensive to get what you need to provide your service, those increased expenses are available, particularly due to interruption in supply chains and things like that. And then repaying debt obligations because of the lost revenue. So that really is pretty broad. We await more interpretation about that, but it seems that, equipment loans, credit card loans, any kind of debt obligation that the business already had as of January 30th is going to be able to be serviced and included in that working capital number. Okay. Other EIDL questions? Anything else in the chat there, Marina? I'm thinking There are collateral requirements under EIDL. They have relaxed the typical SBA underwriting requirements. And they've even said that they are now one of the first concerns, the reason they were pushing people back to their existing bank was for the anti-money laundering and terrorist rules and requirements where they had to confirm identity. They are now loosening that up, and unless they have some strong reason to believe that there's an issue, they don't have to confirm those things. They really are trying. I know it's frustrating, particularly when you're on the edge of your seat and your families are home and your business is keeping you up and you're worried about your employees. The last thing you want to hear is an excuse that the government's operating as quickly as they can. But they really have tried to, pivot and adjust to these programs as they've come about. So also the debt forgiveness component of the EIDL loan, if it's standing alone and you're not using PPP, that's not been ruled on. They've said very clearly any debt forgiveness under PPP is not subject to income tax, whereas typically if you're not required to repay a loan, that would be subject to income tax, that debt forgiveness. They haven't said that for the EIDL portion, but it is at this point in time implied. We are expecting that. But that's not been clarified just yet. So you'll have to just be mindful of keeping an eye on that if you do have that $10,000 emergency EIDL grant. All right.
Good question has come up, and this has come up when in relationship with all of these loans is the unemployment versus the loans. So if you've applied for the loans, can you also apply for unemployment? And that may, whether you're applying for PPP or EIDL, that's a tough question. I think, and I am not well versed in the unemployment rules. The other thing I do want to mention about unemployment is this is the first time that unemployment has even been open to self-employed individuals and contractors and independent contractors and so on. So I think this is kind of a Wild West for everybody. But the way that I would understand is if you've applied for EIDL, if you get that $10,000, that's a grant, that's not necessarily income. So if there's an income requirement to show for unemployment, I don't believe that will be it. So I am not 100% sure on that. We can, I've got a couple of things on unemployment I'm going to try and dig into a little bit over a couple of days. So maybe by next week, we may have some answers on whether it's a timing issue or whether, yes, do both at the same time or wait. I'm not quite sure at this point.
Yeah. It's definitely a lot. And some of these things, like she said, you never had self-employed or gig people that were eligible for unemployment. So those rules are even worse because, because they've never contemplated folks like that being included in those types of benefits. So we appreciate your time. We thank you for your attention, for your good questions. Please continue to pop on the webinars and ask your questions. Feel free to email us questions so that we know what you want to hear about on these webinars. We will continue to dive down into the specific topics. And like I said, if you missed the overview on Tuesday, April 7th, you can pop on and see that webinar on our webpage and then keep following as the updates are provided. We'll continue to bring the most recent developments that we have. So stay safe, stay informed, and try to stay sane as you're staying home. So thanks so much for your participation. We'll see you guys soon.